Yo, yo, yo. Welcome back to the channel. Uh, this video is going to be a video that is focused on being able to detect when distribution is occurring. I was motivated to do this video because of a couple big moves that happened today. Today, Peloton and Pin Gaming had pretty big dumps. I don't know what the fundamental news is. It's tied to Peloton, but I know that's something to do with Dave Portnoy from whatever. I don't know. What's that thing called that he's in? Barstool Sports. Dave Portnoy's got paper hands, so he probably is. He probably dumped the stock. That's a joke. I'm just kidding. Don't sue me. Anyway, I just wanted to say, take this opportunity to talk about how using Wyckoff and the Wyckoff theory, we could have actually seen these moves coming. And I have a few good examples here of when this has happened. I can even show an example that happened with AMC, which is what this channel has mostly been about up until this point. But I hope to develop the channel into a more educational channel. But anyway, let's get into it. All right, so if you're not familiar with Wyckoff, I can show you a distribution schematic just for an example, but don't use it too specifically. I'm not going to sit here and narrow down every single step of this because I've never even looked at this chart before. I literally looked at this chart for the first time today. This is the weekly chart for Pin Gaming, okay? And this is something, since I've been studying Wyckoff a lot more, I've been noticing what you have here. You have to assume that institutions are in control of the market, okay? And that assumption comes with them having most of the ability to control liquidity and also control the price of assets that they're invested in or not invested in. And the way that they do this is by causing price rallies, by buying up stock and causing retail to FOMO in, and then causing sell-offs in order to get retail to paper hand and sell their assets off. So this example, to simplify it and break it down, this is not the buying climax. It's here. How did that end up there? Anyway, don't worry about it. It's actually, this is the perfect example here. So you have a high volume institutional rally, right? You see this phase of the chart, the volume, especially towards the end, really gets pumped up here, right? And this was probably a big moment for this stock back in when it was like $40 back in June of 2020. And this was after the COVID crash. So a lot of stocks actually have a similar chart probably. Then you move into this phase where you continue to make higher highs, right? But what's happening in the volume is it's decreasing. This is a clear sign of distribution, in my opinion, based on all the stuff that I've been paying attention to. That volume decreasing as the price continues to decrease. I mean, the volume decreases while the price increases. If that's not what I said the first time, it might have been. It gives you an indication that the stock is actually quite weak. And I'll show you more examples of this. But I say here low volume retail rally, which is institutions letting retail pump the price so that they can later distribute. And the way that this works is on the exchange, what's occurring is a lot of buying. So the price continues to go up, right? But the volume is lower. So there's less assets that are actually changing hands while the price is still going up. This means that institutions are holding on to their stock. They're not selling very much. They are selling. Like this would be an institutional sell-off right here at this peak, right? They cause this rally, and then they sell off to cause this kind of drop, and then they buy back at the bottom. But for the most part, they're kind of just sitting on the sidelines, and they're letting retail do this. Retail is so pumped up from this buying climax that they think that the stock is now going to the moon. So they continue to trade to and from each other. And maybe institutions are involved in this as well, but not as much as retail. And this is what causes your up thrust after distribution. This is the at least the local high. I don't know if it's the all-time high for Pin. It might be. It probably is. Yeah, it is. But so it went all the way up to like $140. And then it just crashed. And you'll notice that you have volume spikes as price is decreasing which is a further sign of weakness and a sign that institutions are actually selling the asset off, right? So you have this big sell-off here and this volume spike. You can see, right? The volume, boom, just suddenly a big explosion of volume here. And that is kind of confirmation that you're I mean, this is kind of like the ultimate signal, like, hey, we've been low volume here while the price has been rising, and then all of a sudden we get really high volume and it's a big red day. It's not guaranteed. None of this is financial advice. It's just an analysis that says, okay, yeah, you might see further downside. And then now look at what pin is doing. A huge red candle after relatively medium volume. Big red candle, big red volume spike, right? So I would expect, and again, I mean, this isn't financial advice. Well, maybe this is the buying climax. I don't know. It doesn't look like a buying climax. I'd say that the high volume indicates the buying climax, but I would say, I mean, not financial advice, but I would expect that, according to the schematic that you're looking at over there, and we can draw support and resistance, but it's pretty clear here that you're going to be seeing maybe some sideways action here, maybe a little price. Well, hold on. Let's go back. So you're going to see a spike up here probably as a reaction to this big sell-off, and then ultimately I think that the price is going to slowly just work itself down, and then maybe you come back down to this like $30-ish region. And then at that point, you may see accumulation begin for institutions, or you could see further distribution through a redistribution schematic or something of that nature. That's what I would expect to happen. Obviously, I'm no expert, I'm just a guy on YouTube, so do with this information what you will. Let's talk about Peloton. So Peloton, this is a weekly chart, okay? This goes all the way back to 2019, but we're really going to focus here on the 2020 and up. Again, you can see a lot of stocks had a big, nasty bottom here in March 2020 due to the COVID crisis. And so here you have a primary supply and a buyer's climax, right? And that climax is clearly indicated. Look at this volume, right? You have this insane volume spike while the price is just rallying, right? Everybody's going to be rich. That's what the institution's want you to think. And the composite man, if you're not familiar, it's in Wyckoff theory, but basically the composite man, just pretend like you're trading against one person. So I'll use institutions and composite man interchangeably, but just pretend like you're trading against one person in order to fully understand what's going on with this theory. So then what happens, right? You have your buyer's climax. Look at volume. Look at price. Price is on an uptrend. Volume on a steep downtrend. And actually, you don't even see more volume come into play until this big red candle here. To me, this would be a signal that you're up at the top. I mean, you're this is... I would be freaked out if I saw. I'd go, oh man, okay, yeah. We finally get some volume and it's that. I don't know. So then you see the price kind of levels out here, and then it's kind of boring volume-wise, and the price is just kind of dumping down, which is generally bullish. And so that's why right here you see this big dump happening. The volume's not very high. That's actually a pretty good signal that you're going to see this little uptick, right? Now, you get down here, so I wouldn't really be trading this, but obviously this is something that you can analyze. You'd say, oh, look, well, you might have a little relief rally, right? Something to kind of make us feel a little better. So then you have this big sell-off with this big, nasty red candle. I mean, this is almost as high as this. This is a clear indication. This was a fake out, right? What happened after this is institutions grabbed this bottom here, caused the price to skyrocket up, and then the volume just disappeared again. This is clearly just a relief rally, this last point of supply sort of thing. And actually, this one kind of it looks like the other distribution schematic, and I can pull that up for you right quick. Let me show you the other schematic. The other distribution schematic has this upthrust in phase B followed by a last point of supply here in phase C. And again, they don't have to be exactly like it, but you can see that, you have this buying climax, sign of weakness, upthrust in phase B really is what this is. right? And then you kind of trade back down, and then you have this last point of supply, and now you can see also here. Look at the support and resistance, and look at where the schematic ends up. I put this purple target here. This is where the stock ended up in after hours, the $62 range. That's why, because this is where your primary supply came from. And if you remember the schematic, and I'll just show you the other schematic. You see this primary supply? It's pretty clear that this was what was going to end up happening, right? So we can also look at an example with Doge, and I don't want to beat a dead horse here, but I just want to show you another example because this is one that I've noticed. And Doge's rally in January of 2021, you see this epic volume spike. Everybody is euphoric. Everybody's having so much fun. Everybody's getting rich, up to like 8 cents. I specifically remember this. Then you have this sell-off, and then you have a secondary rally. The price continues to go higher, but volume is much less than it was before. This is a clear signal that institutions now are just letting retail trade this thing against each other, and you can feel the vibe of this when it happens too. You kind of get the sense that like it's not as pumped and excited. It's almost like, oh, I hope we make it to 10 cents, not that we will or something, right? The mood changes after this move, but people are still involved enough to keep trying to buy it and keep sending it up while institutions are just waiting to dump here at the top. That's pretty much the idea, right? And normally it'll fake you out at some sort of psychological level. Like in this case, it was 10 cents. And then you just kind of have this low volume kind of sell off. Now, I think that this lower volume like this while the price is cascading down like this is actually a pretty bullish sign that you're going into accumulation, and that's what you ended up seeing. See how low the volume is down here? I mean, you probably can barely see it on the video. And then you see this nice little green volume spike out of nowhere. Boom. Okay, this is a good signal that maybe bullish institutions are just testing it out and seeing if people buy if they cause a little fuss, and then eventually, boom, another rally. So let's look at the volume again. Rally, buying climax. See the volume is as high as it's going to get. Sell off. And then just this relief rally. Just nothing. The volume just kind of dies. This was the 70 cents run. And this was Elon went on Saturday Night Live and stuff like that around here. So they had this anticipation going up to the Saturday Night Live thing. And actually Saturday is when, I guarantee you this is Saturday, May 8th. Let's see, May 8th, 2021. May 8th, Saturday. Yeah. So May 8th, I just remember this was like just the ultimate distribution day. You ended up having that distribution, and then you just have this sell-off, and everybody's looking at it like, oh, we're going to $1. Elon's going to take us to $1. But in reality, you can just tell that, right, the volume just wasn't there. The institutions were done, and they were just going to let retail buy this thing up with their supply that they sold off here to cause this sell-off. They gathered up again here, cause this big nasty wick, cause everybody to get excited, send the price heading higher. Retail's trading against each other. They just dump it right off. And then now I think that Doge is kind of doing the same thing that it was before, where if you look at you just look at it, the volume was pretty much non-existent on Doge, and then all of a sudden, boop, you got this little spike. Boop. This was October. It's almost like like one of those heartbeat things, and it's like, oh, it's dead, and then boop, you're like, oh, is it alive? No, it's dead, and then boop. So I guess you come back alive, right? So yeah, I mean, I'm not, obviously not financial advice, not saying anything's going to happen or not happen, but there's a trend. But yeah, so that's pretty much the video. Just a little like lesson. Oh, and by the way, I did do it on AMC too. So just one last time, we'll just look at AMC because that's what the channel is kind of centered around. You can see the volume spike occur here, in June. It dives back down. This is institutions selling off, causing the sell-off. They buy back. Everybody's like, oh, we're going to $100, right? We topped out at like 70. It's really similar to the Doge run in a way, right? And then you have this kind of low-volume relief rally where institutions are attempting to keep retail in the game, keep retail interested, keep them buying. And mostly I'm talking about new retail money, not really apes, but I'm talking about like people who just got into AMC on this run up, which obviously happens, right? It becomes a big media event, all that stuff. Same thing with Doge, same thing with a lot of these stocks. And then ultimately they do their final distribution here, and then you begin what I think is accumulation on AMC. And we'll do an accumulation video too, because I have a few accumulations that I've been watching on longer term. So if you want to see that video, make sure that you subscribe and turn on your post notifications so you don't miss any of my future videos. But yeah, if you haven't already, I'd say it's a good idea to go check out Wyckoff theory. If once you see it, you can't unsee it. You know, once you're really looking for it, and the volume is kind of like the next step. And you know, you're looking for the schematics, but then you're looking for the volume, because a lot of times what you'll notice is that the schematics will play out within each other. So, like for example, this is like a distribution schematic that was occurring within a larger accumulation schematic. And I think that volume is actually what plays the biggest role in determining whether you're in accumulation or distribution. And obviously, it scales out, right? So it'll happen on a shorter time frame, like an hourly chart. So like, for example, this region of the chart here, if you go to the hourly, you can see pretty distinct accumulation characteristics. And you can just see here, you know, all your volume spikes are green. You know, the bearish red candles on volume are just lower every time than the buyer's volume. So generally speaking, those are good signals that I see historically show that, you know, buyers are in control. So they'll cause downtrends so that they can accumulate and get more. But eventually they're going to be looking for a markup and a price move into the upside. So that's pretty much the video. Hopefully you enjoyed, and make sure you smash a like, drop a comment down below. Let me know what your thoughts are on this. And yeah, it's pretty interesting. So dig around. Let me know some more stocks that you think are either in accumulation or distribution. Go dig around. I'll give you a hint. Go check out Lucid and look at BlackBerry. But BlackBerry, you got to zoom out a little bit more than maybe you're expecting to. So go check that out. Maybe look at the all-time chart for BlackBerry, and maybe you'll see some stuff. But yeah, other than that, you guys have a great day, and until next time.